Sure, here's a detailed explanation of Standard on Auditing, SA 200, Overall Objectives of the Independent Auditor and the Conduct of an Audit in Accordance with Standards on Auditing, as outlined by the Institute of Chartered Accountants of India, ICAI. Objective of SA 200. The primary objective of SA 200 is to establish the overall objectives of the independent auditor and to set out the nature and scope of an audit designed to achieve these objectives. This standard provides the foundational principles and responsibilities for auditors when conducting an audit of financial statements. Overall objectives of the auditor. 1. To obtain reasonable assurance, the auditor aims to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. Reasonable assurance is a high level of assurance but is not an absolute level, as it is not a guarantee that an audit conducted in accordance with SAs will always detect a material misstatement. 2. To report on the financial statements. The auditor aims to report on the financial statements and communicate as required by the SAs, in accordance with the auditor's findings. Key principles of SA 201. Ethical requirements. The auditor must comply with relevant ethical requirements. This includes integrity, objectivity, professional competence and due care, confidentiality, professional behavior. 2. Professional skepticism. The auditor must plan and perform an audit with professional skepticism, recognizing that circumstances may exist that cause the financial statements to be materially misstated. 3. Professional judgment. The auditor must exercise professional judgment in planning and performing an audit of financial statements. Conduct of an audit. SA 200 outlines the essential steps and responsibilities in the conduct of an audit, including 1. Complying with SAs. The auditor must comply with all SAs relevant to the audit. The SAs provide the framework for the audit process and ensure consistency and quality in the audit. 2. Objective evidence. The auditor must obtain sufficient appropriate audit evidence to provide a basis for an audit opinion. This involves the collection and evaluation of audit evidence through inspection, observation, inquiries, and confirmations. 3. Audit procedures. The auditor must design and implement appropriate audit procedures to address the identified and assessed risks of material misstatement. These procedures include risk assessment procedures, further audit procedures responsive to assessed risks, including tests of controls and substantive procedures. Key elements explained. 1. Understanding the entity and its environment. The auditor must understand the entity and its environment, including the entity's internal control. This helps in identifying and assessing the risks of material misstatement. 2. Assessing risks. The auditor identifies and assesses the risks of material misstatement, whether due to fraud or error, based on the understanding of the entity and its environment. 3. Planning the audit. The auditor plans the audit to ensure that it is performed in an effective manner. This includes determining the nature, timing, and extent of planned audit procedures. 4. Gathering evidence. The auditor collects sufficient and appropriate audit evidence to support the opinion on the financial statements. This evidence is gathered through various audit procedures, including inspection of documents, observation of processes, inquiries of management and staff, external confirmations. 5. Evaluating evidence. The auditor evaluates the audit evidence obtained to determine whether it supports the conclusions drawn and whether the financial statements are free of material misstatement. 6. Forming an opinion. Based on the evaluation of evidence, the auditor forms an opinion on whether the financial statements are prepared, in all material respects, in accordance with the applicable financial reporting framework. 7. Reporting. The auditor issues a report that includes an opinion on the financial statements. The report communicates the auditor's findings and conclusions to the users of the financial statements. Conclusion. SA 200 provides a comprehensive framework for the conduct of an audit of financial statements. By following the principles and procedures outlined in this standard, auditors can achieve the overall objectives of providing reasonable assurance and reporting on the financial statements. This helps in maintaining the quality and consistency of audits, thereby enhancing the reliability of financial statements for users.